Donald Trump stood in front of the cameras and told America that Bitcoin is the future. He signed an executive order to create a national strategic Bitcoin reserve. His sons send emails every single week telling Americans to buy crypto. And today, February 26, 2026, their own Bitcoin company just reported a $59 million loss in a single quarter. The stock is down 90% from its high. So the real question is not whether Bitcoin is a good investment or a bad one. The question is why the family telling you to buy is losing money doing exactly that. American Bitcoin, ticker symbol ABTC, filed its fourth quarter earnings for 2025, and the numbers tell a story that nobody in mainstream media seems willing to say out loud. A $59.45 million loss in a single quarter. A $153 million loss for the full year. A stock price down nearly 90% from its high. The family that owns 20% of this company is the same family occupying the White House, making policy decisions that directly affect the price of the asset their company holds. This is not a political argument. This channel does not care about left or right. This is about your money, what is happening to it, and who benefits when you buy. The raw numbers deserve to be laid out plainly. American Bitcoin posted a net loss of $59.45 million in Q4 2025. For the full year, the company recorded a net loss of $153.2 million. Bitcoin's price fell 23% during the quarter. Under new FASB accounting rules that require companies to mark their crypto holdings to market every quarter, American Bitcoin was forced to record a $227.1 million non-cash impairment on its books. The company currently holds over 6,000 Bitcoin. Roughly one-third was mined by the company itself through a fleet operating at 25 exahashes per second. The remaining two-thirds were bought on the open market using money raised by selling stock to retail investors. In Q4 alone, the company raised $150.5 million through an at-the-market stock offering, meaning they sold shares to the public, took the cash, and used it to buy more Bitcoin. Shares are currently trading around $1.05. They peaked near $9 when the company went public in September 2025. If you bought at the high, you have lost roughly 90 cents of every dollar you invested. American Bitcoin was created in March 2025 through a partnership with Hut 8, one of the largest Bitcoin mining companies in North America. Hut 8 holds the majority stake at 80%. Eric Trump and Donald Trump Jr. hold 20%. Donald Trump himself is listed as a shareholder. The company went public through a merger with Griffin Digital Mining and began trading on the Nasdaq in September 2025, timed to capture retail enthusiasm at the peak of post-election crypto mania. Bitcoin had just hit its all-time high, near $126,000 in October 2025. The mood was euphoric. Everyone was talking about strategic reserves, a crypto-friendly White House, Bitcoin going to $200,000. Right in the middle of that hype, American Bitcoin's listing dropped. Retail investors flooded in at the top. Within 5 months, the stock had lost nearly 90% of its value. The company describes itself as a Bitcoin accumulation platform using a dual approach, mining Bitcoin at scale while simultaneously buying it on the open market with capital raised from equity sales. The mining side is genuinely operational, producing Bitcoin at a 53% gross profit margin in Q4, meaning the cost of generating each coin through computing power is roughly half the market price. Revenue grew from $64.2 million in Q3 to $78.3 million in Q4. General and administrative expenses dropped from 13% of revenue to 9%. The underlying mining business works. But the equity to Bitcoin pipeline is where the story gets uncomfortable. Every time American Bitcoin raises cash by selling stock to retail investors and uses that cash to buy Bitcoin, existing shareholders get diluted. The people who bought in at $9 now own a smaller percentage of the company than when they purchased. Their share of the Bitcoin on the balance sheet has shrunk, even as the total number of coins grew. Meanwhile, approximately 2,776 BTC of the company's holdings are pledged as collateral for mining equipment purchases from Bitmain. The insiders who received equity before the IPO, at prices retail never had access to, are sitting at a dramatically different cost basis. Many of them entered at levels that still represent a profit even at today's prices. The obvious comparison is Michael Saylor and Strategy. Saylor pioneered the Bitcoin treasury company model and went through this exact pain during the 2022 crash when his stock lost over 70% of its value and the financial press wrote his professional obituary. People called him reckless, irresponsible, delusional. Then Bitcoin recovered and shareholders who held through the bottom were rewarded massively. Strategy stock eventually reached levels that would have seemed impossible during the depths of the bear market. The structural comparison between Saylor and American Bitcoin is fair. Both companies issue equity to buy Bitcoin. Both hold coins as a treasury reserve. Both describe themselves as vehicles for gaining leveraged exposure to Bitcoin through the public markets. But there is a critical difference that defines this entire story. Saylor never had the President of the United States making policy decisions that directly affect the price of the asset his company holds. Saylor's success depended entirely on the market. American Bitcoin's success is entangled with policy decisions made by the very family that founded it. If political winds shift, if the administration changes, if crypto policy reverses, the entire support structure shifts with them, in ways that have nothing to do with Bitcoin's underlying technology or adoption curve. That political fragility is something the strategy model has never had to contend with. What follows is entirely drawn from public reporting by CNBC, Fortune, ABC News, and CoinDesk. The conflict of interest structure is unlike anything that has previously existed in American financial markets. Donald Trump signed an executive order creating a United States strategic Bitcoin reserve, signaling to the entire world that the largest economy on Earth views Bitcoin as a reserve asset worth holding. When that signal goes out, every Bitcoin holder on the planet benefits because the perceived legitimacy of the asset increases and the price moves accordingly. The Trump family, through American Bitcoin and World Liberty Financial, holds significant positions in Bitcoin-adjacent assets. When Bitcoin rises, the Trump family's net worth rises with it. The person making the policy and the person benefiting from the policy are the same person. In traditional finance, this would trigger immediate scrutiny from every regulatory body involved. In crypto, the regulatory framework is still being built, which means the gap between what is happening and what anyone is doing about it remains enormous. Senator Elizabeth Warren wrote a letter on February 18 to Treasury Secretary Scott Bessent and Federal Reserve Chair Jerome Powell, warning that government intervention to stabilize Bitcoin prices would disproportionately enrich the Trump family's cryptocurrency ventures. On February 19, House Democrats, led by Representative Gregory Meeks, along with 40 other lawmakers, sent a letter demanding a probe into potential conflicts of interest related to World Liberty Financial, with a response deadline of February 26th, the same day American Bitcoin reported its $59 million loss. A $500 million investment was made into World Liberty Financial by Sheikh Tanoun bin Zayed Al Nahyan, a senior Emirati royal with deep intelligence connections. Democratic lawmakers have called this a national security concern. The paper loss argument deserves an honest examination because the company and its supporters will make it forcefully. The $227 million write-down is technically a non-cash loss driven by FASB rules that went into effect requiring crypto holdings to be marked to market every quarter. Bitcoin dropped 23% in Q4, so the company had to write down the value of its holdings by $227 million on its financial statements. They did not sell anything. They are still holding their Bitcoin. The mining operations are profitable at a 53% gross margin. Revenue grew quarter over quarter. If Bitcoin recovers to $100,000 or beyond, those 6,000 coins become worth $600 million or more, dwarfing today's losses. The strategy model has proven that holding through brutal corrections can reward patient shareholders. Saylor's company was written off in 2022, and the people who held made extraordinary returns. These are legitimate points supported by historical data, and they deserve to be weighed seriously. But when the stock drops 90%, the pain is not abstract for the retail investors who bought at higher prices. If you put $10,000 into ABTC at the peak, you have roughly $1,000 left. You need a 900% gain just to break even. The insiders who got in early need far less. The constant issuance of new shares to fund Bitcoin purchases means long-term holders lose ownership percentage with every offering. There is a meaningful difference between buying Bitcoin directly and buying stock in a company that buys Bitcoin using your money. American Bitcoin is only half of the Trump crypto story. The other half is World Liberty Financial, a crypto protocol founded by Trump's sons in September 2024. It operates a governance token called DeFi, a stablecoin called USD1, and the broader DeFi protocol. The venture was positioned as a way to bring decentralized finance to mainstream America with the credibility of the Trump name behind it. The marketing leaned heavily on the family's political brand, with email campaigns, social media blitzes, and appearances at crypto conferences. According to a detailed investigation by DL News, Trump supporters purchased $550 million worth of WLFI tokens between October 2024 and January 2025 at prices between 1.5 cents and 5 cents per token. When trading began in September 2025, the token soared to 33 cents, creating massive paper fortunes overnight. Early buyers who got in at 1.5 cents were sitting on gains of over 2,000% on paper. But the creators granted themselves sole authority to decide who can sell and when. Only 20% of the total supply has been released for trading. The other 80% remains locked. A vote on when the rest would be released was promised months ago. It has never happened. Dozens of holders are now posting in the World Liberty Financial Forum begging to be allowed to sell. The token has fallen roughly 54% from its all-time high. People are watching their gains evaporate while locked out of doing anything about it. One holder wrote that they held through volatility and silence because they believed. Now they are asking at what point patience becomes neglect. 3 days before the earnings release, World Liberty Financial announced that its USD1 stablecoin was under a coordinated attack. Hackers compromised the social media accounts of several co-founders. Large short positions were opened against WLFI to trigger panic selling. USD1, designed to hold a $1 peg, briefly fell to 99.4 cents. The WLFI token dropped 7% in hours. The company says the attack failed, but the vulnerability was exposed. Bloomberg and the Wall Street Journal have both reported that Binance helped create USD1. The stablecoin was also used to settle a $2 billion investment by UAE-based MGX into Binance in March 2025. The former Binance CEO Changpeng Zhao, who served 4 months in prison, was pardoned by Trump in January 2026. Democrats are now asking whether undisclosed business relationships exist between Zhao and the Trump family. The core dynamics of this moment deserve to be stated plainly. Institutional and politically connected money entered these assets at the bottom of the cost curve. The Trump family got WLFI tokens at 1.5 cents. Insiders got American Bitcoin equity before the IPO at prices retail never saw. The people with the most information and the most connections are positioned at dramatically lower prices than the retail investors who followed the signals coming from the White House. The narrative of government Bitcoin adoption is real, but the timing benefits insiders first. When Trump announced the strategic reserve, he was already holding Bitcoin-adjacent assets. The announcement moved markets. Anyone positioned before it made money. Anyone who bought after it based on the news may have bought near a local top. The regulatory capture concern is legitimate, regardless of which political party you support. When the people making policy about an asset simultaneously hold financial stakes in that asset, market integrity is compromised. This is not a partisan observation. It is a basic financial ethics principle. In traditional markets, mandatory disclosure rules, insider trading enforcement, and cooling off periods exist to protect the public. In crypto, those frameworks either do not exist or have never been tested. The gap between what insiders know and what retail knows is wider than in almost any other asset class. If you believe in Bitcoin as a technology, as a long-term store of value, as a hedge against monetary expansion, that thesis does not live or die with the Trump family's balance sheet. Bitcoin existed before this presidency. It will exist after it. But if you were buying crypto because Eric Trump tweeted about it, because you received an email from the American Bitcoin marketing list, because the White House signaled support for digital assets, pause and think about who sent that message and what their incentives are. There is nothing wrong with being bullish on Bitcoin. There is something wrong with making financial decisions based on the promotional activities of people who financially benefit when you buy. The story is far from over. If Bitcoin recovers, American Bitcoin's 6,000 coins become worth far more than today. The stock climbs. Holders who endured the pain get rewarded. If Bitcoin stays under pressure and the losses continue, if congressional investigations find something damaging, if the WLFI token unlock never comes or arrives at much lower prices, the narrative becomes one of the most extraordinary examples of political financial entanglement in modern American history. The OCC is currently reviewing World Liberty Financial's application for a national bank charter. If stablecoin legislation currently moving through Congress specifically benefits USD1, that would be an extraordinary windfall for a company with direct ties to the White House. The political dimension creates outcomes that pure financial analysis cannot capture. Key dates to watch. The House Democrats demanded a Treasury response by February 26. The OCC bank charter review has no announced timeline but carries enormous implications. The WLFI token unlock vote remains unscheduled. American Bitcoin's Q1 2026 earnings arrive in roughly 3 months. Any congressional hearings focused on Trump family crypto conflicts of interest could reshape the narrative overnight. Other major miners like Mara Holdings and Riot Platforms are exploring converting portions of their operations to AI infrastructure, hedging against deteriorating mining economics. How the broader sector navigates this correction will reveal whether American Bitcoin's strategy was visionary or fragile. What should concern every retail investor is the asymmetry of information. The people at the top know the unlock schedules before they are announced, the fundraising plans before they are filed, the political conversations before they become policy. Retail is always the last to know. That has always been true in financial markets, but in crypto, the gap is wider than anywhere else because the regulatory infrastructure that exists in traditional markets to level the playing field simply does not exist yet for digital assets. There are no mandatory disclosure windows for crypto holdings by political figures. The rules are being written in real time by the same people holding the assets. Invest in the actual asset with the strongest fundamental case, not the political vehicles wrapped around it, not the stocks of companies that buy Bitcoin with your money, not the governance tokens controlled by people whose incentives you cannot fully audit. Understand what you own. Understand who profits when you buy. Know the fee structures, the token unlock schedules, the equity dilution mechanisms. Because on February 26, 2026, the same political family that has been telling America to buy Bitcoin just reported $59 million in losses, while their stock sits 90% below its high. That does not mean Bitcoin is a bad investment. It means you need to separate the asset from the people promoting it and make decisions based on fundamentals, rather than on signals from people who profit when you follow them. If this video changed how you think about the relationship between politics and crypto, drop a like and leave a comment. Are you bullish on American Bitcoin despite the losses, or do you think this is a massive red flag? Are you holding WLFI tokens waiting for that unlock? Do you think the conflict of interest is a real problem, or just the cost of having a pro-crypto administration? I want to hear your honest take because this conversation needs to happen in the open. Share this video with anyone who trades crypto because these dynamics affect every single person in this market. And if you are not subscribed yet, hit that button and turn on notifications so you never miss the next one.